Good morning, this is Ron Brown. This is Saturday, the 12th of February, 2022. You're going to get two market reports this week. This one's going to be short. I did one yesterday during the market hours, and that's also linked. It's about 32 minutes. I did it at midday, and the market totally collapsed after that, so I want to just go ahead and do this. I'm in my Major Markets Plus folder, which includes ETFs, but I'm not showing any ETFs. I have transferred this to the ranking module. You can ignore the Amex because it's full of ETFs. In fact, I should probably just get it out of this folder, but you can see the performance of these indexes over the past 12 weeks. I use 12 weeks because from this high right here down where we currently are, those are 12 weekly bars. So the performance, you can see, has been to safety. It's been in the utilities. The NYSE comp is second. When we get down here at the bottom, you can see Bitcoin has the trust has been weak. It's rallied. It rallied this week, but it closed the week on a down day. The big techs are down nearly 14% based upon the 12-week period, and the stocks is about the same. So it's been brutal for these stocks. Now I'm going to concentrate on the NASDAQ. I'm going to show you what I look at every day when I post that image, which I will post again this weekend. But I use the NASDAQ because it is full of stocks that are considered to be growth stocks and so on. It's not always the case, but generally it's just an old habit, and probably goes back to the days where I followed IBD closely. So let's start over here on the left with the weekly chart. This green line, I'll make this full screen, represents this low back here in March of 20. And what I did is I drew a trend line from the low to the lowest low before the highest high. And you can see that that's clearly been broken. This is a technique used by a trader. I don't think he's around anymore, but his name was Vic Sperando. He always drew his trend lines from the lowest low, from the low to the lowest low before the highest high. And that would be right here, very close. And you can see that it's clearly broken. Now let's go over here and take a look at this daily chart. And I'm going to bring up some drawing tools here. Let's point some things out. So this VPA candle here on the long black candle yesterday, in conjunction with another negative volume pocket pivots. These are not true pocket pivots, but it uses the same criteria of the up pocket pivots. The highest volume to the downside compared to the highest volume to the upside over the last 5 or 10 days. And you can see that these spikes are higher than any up volume over that time period. This would be 5 days, and this would be, well, these are 5-day negative pocket pivots, because this looks like this volume bar here to the upside was higher. So I've incorporated both the 5 and 10-day pocket pivots into one. And you can see that over here. The point is, it just gives us a quick visual to know if this is unusually high volume compared to either the last 5 or 10 days. Now, these 2 days of negative volume or negative VPA flags have turned out to be correct. But remember, these are 1 or 2 day flags, so it could change on Monday. But today's is a down bar after an up thrust, which confirms weakness. Here's the up thrust on this day, and then this down bar confirms that weakness. Now going back a few days, you can see this was a low volume test. It was confirmed to the upside the next day with an effort to rise, and the market went up to this point, and then it stalled. It couldn't get past this resistance. Now These resistance lines are drawn in automatically by HDSI. These are VPA resistance lines using the zigzag indicator. Okay, looking back over here, you can see the sentiment's bearish, the close is down, above average volume, the spread is wide. This refers to this candle. The RWI, the random walk, I don't really use, but it's telling we're in a minor downtrend and an intermediate term downtrend. These are the VPA trends. Yesterday, this was long. Now it's down. The medium is still up and the short is down. Now these are based upon various time frames, and I'm not going to get into that now, but you can look it up in the help file. But it's obvious that this is a very choppy, dangerous market, and so these change daily here also because there's no continuity to this market. So we're down almost 15% from the 52-week high, beginning of the year down 11.8. Had a positive gap up yesterday compared to the prior day's close. The volume point of control is negative. The accumulation is D. AD direction is down. Neither a bongo weekly nor a bongo daily. That I should say, neither a positive. And the fan uptrend or downtrend is no, because it's a trendless market. That is based upon my fan, which is the 200, the 100, the 50, and the 18. If they're all in the same direction or stacked on top of each other, either up or down, then one of these would show a uptrend or downtrend. Here's the daily information. The volume in billions, and this is how much the volume was up compared to the 90-day, which is this moving average line. Now looking down here, you can see that the advancers clearly outnumbered the decliners. I'm going to bring up a, well, I can't do that. I'll clear this out. I'll bring it up now. Okay, now we can look at this. Advancing stocks, 605 compared to 2790 decliners, and you can see that the advancing volume clearly outweighed the declining volume. New highs 64, new lows 162. The let's see if I'm on the correct day here. No, I wasn't. So forget about what I just said about. Let's do this again. Now I am on the correct day. I clicked over here. I thought that ARMS index was wrong, and it was. So let's do this again. 904 decliners, 2465 advancers. Here's the advancing and declining volume. New highs 30, new lows 110. ARMS index 119. It's above 1, which indicates heavy selling pressure. Now looking back over here, you can see that these 2 weeks were these resistance lines going back here, held up. Price was rejected at these levels for the past 2 weeks. And that would be, put a frame around here. 1, 2, 3, 4, 5. I went too far. Let's see. This would be the last 2 weeks right here, which are these 2 bars. It's obvious that if you're going to play in this market, you better be a day trader in and out, because it's just too dangerous to play with this chop on the daily and the weekly charts. There are some safe plays, and if you look at the market leaders, and I'm going to do that very quickly, you have a scan for this if you're a member of the Insider Club. Going to go to all securities. I'm just going to drop down here to my daily views and go down to the market leaders. And you can see yesterday that there were several stocks that were up, and look where they were, of course, with oil shooting up. Exploration production continues. Just a lot of oil-related stocks, and there's some banks in here and so on. If I put this up and change this to industry, well, let's look at this intraday up and down. You can see that 55% of the stocks in this list were up and 29 or 45% were down. I'm going to drop this down to industry, and you can see what we have here: exploration and production, bank, midstream, integrated, oil and gas, services, and so on. Now, this list of stocks, I want to show you how they performed. What I did is I went back to this week here, which would be the 26th of November, and I'm going to take today's group, which I have in the designer. Okay, the market leaders group. I'm going to click on the dollar sign, and I'm using, let's see, that was from Friday the 26th, so we'll use Monday morning, the open Monday morning on November 21st, and go through yesterday. And I'm going to do equal dollar investment and click on this, and you can see that this was I ran this just now, and look at some of these stocks over that 12-week time period. First of all, the entire group was up 21.22%, 128 gainers, 0 losers, and some of these stocks turned in great numbers. Here's one up 82, 71, 56, 55, and so on down the list. The worst performer, Vonage, was up 0.34%, but look where the strength was in the industries: oil and gas stocks, steel producers too. My point is, yes, this is a terrible market, and there are ways to beat it if you're on top of it. And I'm not saying it's easy to do, but HCSI will really keep you on the right side if you look at these stocks carefully and look for the leaders and look for the leading groups, because that's where you can come out ahead even in a really bad market like this. Anyway, thanks for listening, and there's another video if you want to watch it where I